Hey, this is Matt from InvestiQuant. Today is Thursday, April 8, 2021. Yesterday, the markets consolidated and finished up at an all-time high, another 52-week high as well, with that being an all-time high. But we had a fairly quiet session. The S&P just shy of 16 points of range, which is quite a bit lower than what it's been averaging. So what I want to do this morning is take a look at that pattern where you get a consolidation pattern that closes at a 52-week high. So let me go ahead and set that up in Discover. We'll use two simple patterns and they will be used on all four instruments. The setup will be entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time. The exit will be set to the end of regular trading hours, which is 4:15 p.m. Eastern Time. Now, we're currently trading higher in the overnight session, so I'm going to go into the opening filters, and I'm going to say that we are gapping up. That just means that the open is above the prior day's closing price. Next, I'm going to go into the price patterns library. I'm going to grab two different patterns that took place yesterday. One of them was a 52-week high close. The other one was a narrow range pattern. So first, I'm going to grab this narrow range pattern that is in the range of the last session category. I'm going to hit equals next to NR7. That means that yesterday's range was the most narrow range of the past 7 sessions. And next, I'm going to go into the new highs section, and I'm going to say that yesterday closed at a 52-week high close. So I can grab that from right here, or I can go over to the active today section and grab it from the new highs, where it says day after 52-week high close. If I scroll down, I just selected it from the active today, but you can see it right here in the new highs section. So now that I've selected both of those patterns, I can throw it above a 200-day moving average, but probably doesn't matter since we're at a 52-week high. And now I can hit view results. And here we go. These are the results based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, when you are gapping up following a 52-week high close that was a consolidation day, which I've defined as an NR7. This is above a 200-day moving average, but like I said, that doesn't really matter here, so I could have left that out. Historically, we've got 65 samples in the S&P. We've got 59 in the NASDAQ, 55 in the Dow, and 36 in the Russell, and that's dating back to 2003. If we look at the win rates on these, you'll notice the S&P is the weakest of the group with a fairly weak win rate at just 35%. So historically, this has been a fairly weak pattern for the S&P, but it's not as weak in the other instruments. The NASDAQ's actually a little bit positive there. 54% of those have closed above the opening that following session. The Dow, 45%, so that's a little weak, as is the Russell at 44%. Average win to average loss, you can see the average loss is a little bit larger than the average win in the S&P. That's not the case in the NASDAQ, so this pattern is a bit different in the NASDAQ than the S&P. Very similar in size for the Dow, and then the Russell, the average win has been a little bit larger than the average loss. So as far as average moves go, they have been a bit mixed, but 3 out of the 4 have been a little weak on the win rates, with the S&P being the weakest of the group. So hopefully you found that helpful. Good luck today, and we'll see you next time.